we're even seeing Treasury yields on the rise. It's gone up, I believe, some 20 basis points since that FOMC meeting. Should yields continue to rise, what would that be signaling to the markets?
Well, I don't know what it signals to the markets, but what it's actually signaling is higher inflation. These higher inflation premiums are being built into the yield curve. I think it also shows a declining confidence in the ability to repay the debt with money that hasn't been debased. So it's a sign of inflation, a weak dollar to come, loss of confidence in the U.S. It's really reflecting a lot of negative things, and I think a lot of traders are whistling past the graveyard when they fail to contemplate the significance of what they're seeing.
And week in, week out, we're seeing that repo market, or reverse repo market, I should say, just continuously growing. Why are we seeing that daily reverse repo number grow, and what is the Fed doing with asset-backed and mortgage-backed securities?
Well, the Fed is taking them on their books because they don't want to see the rates rise. The fact that the Fed is so active in the market is an indication that there is not sufficient private demand to keep interest rates this low. And so the Fed is interfering with the market and printing more money to buy up the bonds for which there is not sufficient private sector demand. Now, this is a mistake because the private sector is trying to send a message that there's too much debt and that interest rates need to rise to curtail that. But the Federal Reserve doesn't want the market to function. The Fed wants to distort the market so it allows excess borrowing to continue so it can keep the bubbles from deflating. It wants to prop up the stock market, the real estate market, the bond market, and it wants to enable the government to continue to spend money that it doesn't have, and so it interferes in the market. But this is doing grave damage to the structure of the U.S. economy and is going to lead to a much worse economic implosion than the 2008 financial crisis, with far greater implications for the dollar, for the cost of living and the standard of living of every American.
Okay, because if I understand this right, when we had QE, the Fed was basically throwing money in the system, and now with the reverse repos, they're trying to throw it in the furnace and burn out all this excess cash?
No, they are supplying the market. They are with cash. They're providing credit that the private sector doesn't have. So they're coming into the market and intervening to affect an outcome that is opposite of what a free market would produce. Well, it's possible that the Fed starts the process of tapering. But what I think is impossible is that it actually completes the taper, because the idea is to continue to reduce the monthly purchases, to taper them until the Fed is no longer purchasing any government bonds or mortgage-backed securities at all. And I think that journey is impossible to complete. I think before long, the Fed will not only stop the taper, but reverse the process. And ultimately, the Fed will be buying more bonds and mortgage-backed securities per month than when it began to taper. So right now we're doing about $120 billion a month. Actually, it's a bit more than that, but that's the official rate. Let's say they manage to succeed in tapering that down to $100 billion a month or $80 billion a month. What I think is going to happen is they'll halt the process, and I think before Biden finishes his term, the Fed will be buying $200 billion a month, maybe more than that. And the reason they're going to do that is because government spending is exploding, but the willingness of foreigners to finance that spending through private loans is diminishing. Who wants to loan all this money to the U.S. Treasury at such ridiculously low interest rates, especially with inflation accelerating? Real rates are plunging, and so the Fed is running out of buyers for treasuries, and so therefore the only way to sustain the spending is for the Fed to get more involved and to buy even more bonds than it's buying now. And so it can't do that without expanding the size of the QE program, and that's exactly what it's going to do.
Any chance Powell may raise rates even without a taper?
No, rate hikes are not even on the horizon right now, but I think eventually Powell will be forced to raise rates, very reluctantly, because the dollar is going to be imploding and consumer prices are going to be exploding. But even when the Fed finally gets around to raising rates, it will be too little too late, because real interest rates will still be, solidly negative, even if the Fed nudges up the nominal rate. But the problem is, if they nudge the nominal rate up too high, the government doesn't have the ability to pay. And so that's the predicament that the Fed is in. The only way the government could pay its debts is for the Fed to monetize them. But as the Fed monetizes the debts, it creates even more inflation.